Hello, and welcome to another Bitwave Quick Hit. All right, you've probably been hearing about it, but Pat, can you tell us what is Form 1099-DA?
Yeah. So over the last couple of years, the IRS has been looking at how to actually charge taxes on digital assets. And so finally, they did the last 2 years was spent getting feedback on this form. Bitwave, we actually sent some feedback on it because there was some challenges. So what is a 1099-DA form? It is very simply, it is a equivalent of a 1099 form that you know and love for everything else that you do. So if you work as a contractor, you get a 1099. If you trade stocks, you get a 1099. I believe if you mug someone in Central Park and steal cash, you're supposed to file a 1099 for that. So, everyone knows and loves 1099s, obviously. The 1099-DA is specifically for how crypto exchanges are going to report to the IRS how they are, what your trading activity looks like. Now, the problem is, and this is where it all gets really tricky, is that any single crypto exchange doesn't actually have all of your visibility into all of your cryptocurrency activity. So if you buy Bitcoin in Kraken for let's say you buy it at 10,000 or $60,000, you move it to a private wallet, you to a holding wallet you have, and then you move it into Coinbase and you sell it for $70,000. Um, the 1099-DA does not actually capture that movement particularly well because Kraken is going to send a 1099-DA that shows that you bought at $60,000. The Coinbase is going to send a 1099-DA that shows you sold at $70,000. So theoretically from that example, you could imagine how maybe the IRS could stitch those together. But the problem is that if they're filling out any amount of gain loss information, they obviously don't know the gain loss amounts at that point. Because what's going to happen is that Coinbase is going to see the only real information that they have is the cost basis that they're implying. Usually the way these folks do that is that whenever the moment you deposit it, that's what they assume the cost basis is. So let's say you deposit into Coinbase at $69,000 and then it goes up to 70 and then you sell it, they're going to think you had a $1,000 gain. That's not at all accurate and not right. So you need a tool to actually, you need Bitwave to track your taxes and your gain loss and all that kind of stuff. But what's going to happen is all the exchanges that are domiciled in the US are going to start sending these activity reports, these 1099-DA activity reports up to the IRS this year. So you have to be aware of it. You have to start thinking about it, and you have to start keeping really, really, really good records that go into detail that actually can prove if, Kraken said 60K, Coinbase said 70K, you need to prove that was that 70K, when you go to the IRS. A better example of where this gets really, really tricky is, let's say you went to a DEX. So you buy DEX with USDC on against Ethereum, and then you move that Ethereum to Coinbase and sell it. Well, that DEX is not doing a 1099-DA. And so from Coinbase's perspective, they might report that you got that Ethereum at $0 and sold it at 2,000, and that was all capital gains. So you have to start the banks are going to, the exchanges are going to start reporting this. So there is no more free lunch. You are going to get every bit of activity that you do on exchange is getting up to the IRS. And now you are responsible for actually dealing with that and paying taxes, but keeping records yourself so that you can back up. If you say, no, I bought this Ethereum on a DEX when it was at 1900 and sold it at 2000. I didn't get it for free at $0. You have to have those records to prove that.
So what's on Form 1099-DA?
Well, so it always starts with your personal information. So social security number, things like that. They mostly focus on gross proceeds, which is where you get into trouble here, obviously. But they're going to focus on I sold 3 Bitcoin at $70,000. So that's $210,000. That's your gross proceeds. They have what type of digital asset. They had this crazy, I think they backed off of this, but they had this crazy model where they were trying to create an ID for every single digital asset, which was never going to work in a billion years. But because we have that, we have in Bitwave, we have a security master is what we call it, that has every single digital asset that's out there mapped to an ID. We have 40 million assets that we track pretty easily. So
yeah,
they show you the units that you sold. So if you made a sale, it'll show you the units you sold, and then the cost basis. Now this is where you get into trouble because honestly, the cost basis is going to be one that they imputed. So you either need to be able to go in there and change it, which not every exchange is going to let you do, or you need to have the data to actually back up, like, hey, no, 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 that was not the cost basis. This is the actual real cost basis.
Hmm.
How long you held it on the exchange again, that's not actually going to be accurate. And then FMV at the time, and then any fees that you paid if you want to capitalize those fees.
Yeah. So is this how you report crypto trading on your
This
taxes?
is how, well, this is how the exchanges are reporting your crypto trading to the IRS. When you report it, you might use a 1099 DA for some amount of activity, but this is like with all things, is that the exchange is going to ship a form up to the IRS that has the information, and then you're also going to potentially send in a form that might have your own information like laid in there, and then the IRS is going to look at those and make sure that they kind of match up and that things make sense.
So who receives a 1099 DA?
Everybody who, if you have an exchange account, you will get a 1090A. If you have an exchange account that's domiciled in the U.S., that's the easiest answer. An exchange account domiciled in the U.S., you will get a 1099DA.
And I think you touched on this already, but when does 1099 DA reporting begin?
This year, this is the first year that they are actually doing it, and so
And,
2026 for the 2025 tax year.
and how is a 1099 DA different from other 1099 forms?
Oh, they all have their very, very specific purpose. So, some of them don't track things like cost basis and units and cryptocurrency and stuff like that. So, a 1099B that just tracks your wages, you're just putting a dollar amount that you got in there. So this is actually, it's a much more detailed 1099 than other things.
And then last question, are there any special rules for things like stable coins or NFTs?
NFTs, you still need to report them, obviously. So they're treated as securities on here on that side. Um, Stable coins are a little bit different because this is the IRS. Like, this is where it's interesting. There's separate guidance from FASB for accounting versus the IRS for stablecoins. The IRS generally is okay with you using stablecoins as a cash equivalent, whereas FASB actually does not like. They have not yet approved stablecoins as a cash equivalent on your balance sheet. So the IRS, you really can treat stablecoins a lot more like cash, and you just have, if someone gives you a gift, or if you have de minimis of $10,000, like it just acts a lot like cash on your from a tax perspective.
Got it. Any final thoughts on what a 1099 Form DA is?
No, that's get ready for it. It's coming.
All right. Thanks so much.